Hey guys, this is a market update. Absolute catastrophe happening right now within crypto. But towards the end of this video, I'm going to give you some copium because Bitcoin is not going anywhere. We know that, and there's a bunch of good protocols within crypto as well, which are going to be extremely important for the future of finance. But right now, Genesis, one of the most important firms within crypto, is going through a real catastrophe and potential bankruptcies. We're going to look at that in this video and some of the reasons behind this, including how they're actually trying to raise funds and how this is going to affect crypto prices, as you can see right here. Timestamps for everything down in the description as usual. We'll first get on to Genesis though and what's happening. Now, Genesis were a massive creditor to FTX. They had funds on the platform and they've just lost hundreds of millions of dollars within FTX. And so this is coming on the back of money that they lost in Luna as well. So it's been a really tough time for Genesis. Now, why that's important is because Genesis have tentacles everywhere within crypto, and they have many creditors themselves, and they have stopped their lending product because of essentially a potential insolvency. So let's see what the latest is on this. Genesis is having a hard time raising cash for its lending unit, and it is warning potential investors it could possibly file for bankruptcy. Now, the latest on this is that Genesis have no plans to file for bankruptcy, and so they're trying to work things out. And so there's a lot of conflicting information right here about Genesis potentially going into bankruptcy. They've actually said that themselves through the press, but no plans as yet. Now, they were trying to raise $1 billion right here, but that target has been reduced from 1 billion to 500 million. Now, what is the reason for that? Is it that they actually have found out that they don't require that much money, or they obviously can't raise that much money, right? There's no money flowing into crypto right now. Everyone's got their door shut. They don't want to give any money to anything in crypto, all right? And so, you know, is it a fact that actually they don't need the billion, they only need 500 million, which is actually quite good news? Or is it the fact that they just want to kick the can down the road a little bit? Two sources added that DCG is unwilling to sell parts of its venture portfolio. DCG, by the way, invest in a ton of crypto projects and blockchain projects. So that's why the whole market is feeling this uncertainty about what can be sold, if it has to be sold, right? And so that's just what we're in right now as a pricing situation. Bloomberg has cited a statement from Genesis that it has no plans to file for bankruptcy at the moment. Now, something that DCG also owns, Digital Currency Group is the group. They own CoinDesk. They own the Grayscale, Bitcoin, and Ethereum trusts as well. Now, the Grayscale trust is a jewel in the crown for DCG because it makes them around $200 to $300 million a year in income from fees. Everyone that's invested in that Bitcoin trust is having a complete nightmare because the trust trades at around about 40% discount to the price of BTC. So you put your money into that trust at a time when BTC can potentially have been higher, and now the trust is trading at a 40% discount. But Grayscale just cream fees off the top of it. So everyone's stuck in there and they can't even sell out. That's an issue, and right now that trust is getting sold off. But even with that money that's being earned, DCG and Genesis obviously have a hole that needs to be filled that they don't have cash for, which is why they might sell that asset. The rumors are going around, but they've said they have no plans to sell that. There's some rumors about something called a Reg M, which is where the fund actually gets redeemed. And that also, if that happens, means that there is probably a ton of people that have that trust that would love to have that liquidity right now in a bear market, meaning more fear that if the trust unlocks, there would be spot sell pressure for Bitcoin. Now, does that matter if you hold Bitcoin in your wallet? We can wait this out because Bitcoin doesn't go insolvent. And so what this price action is telling us is there are a bunch of over-leveraged people who have run their businesses extremely poorly and are getting seen off by the market. This is how a market works. They have not run their balance sheets properly, not run their businesses properly. And so people that are dollar cost averaging right now, long-term investors, have no need to pay a higher price for the Bitcoin that those people are required to sell because they mismanaged their own funds. So that's why prices are coming down. Yes, it's difficult to sit on this as an investor. You never want to see your value of your portfolio go down, especially from these highs, but we have to look at the market as it is. Long-term investors see through areas like this and pick up cheaper assets that they want to invest in from people that are mismanaging their own accounts. And so that's the opportunity for long-term investors. As you can see here on Bybit, we're just in no man's land for Bitcoin in terms of the price. There's no technicals going on here. We're just trading around, trying to get liquidity. People are fearful. People are selling off potentially. Is Grayscale going to redeem? Do they have to sell off parts of their assets? All of this uncertainty for right now. And so for right now, there's really nothing technical on the charts, right? We're at a level here. It could easily go to 15. You're looking at, areas around here that have been traded last, which are around the 13,000, 12,000 level, and then down to the 10,000 level. But that's a long way to go. And it really relies on the news flow and, what happens with Genesis and any other potential bankruptcies. Or if Genesis actually raised the funds, then you'll probably see some, fairly decent sentiment come back into the market and stop any sell pressure right here. But the sell pressure is because we know there are 4 sellers potentially in the market, so why should we pay more? Now, if you don't want to trade, check out Bybit, link in the description. If you're a trader, you get up to $4,000 deposit bonus. If you just are a dollar cost averager, free, commission-free spot trading on Bybit right now as well. So check that link in the description for that, but always take your investments out onto the blockchain if you can. Something awesome as well that's just been released by CoinMarketCap is a reserves feature. If you go to CoinMarketCap right here, go over to the exchanges, you can now see everyone that shows you their reserves and what they have. So you can see this, everything with a little icon by it shows you the exchange reserves. I'll just show you on Binance right here so you can see. This shows you all of the reserves that they keep on their cold wallets. This is client funds that are in a cold wallet. And it's all right here. So you can check that they actually have the funds that they're supposed to be keeping. And you can see Bybit are doing this as well. A bunch of other firms are doing it. I suggest going on CoinMarketCap and just seeing exactly what they're holding. But you now know that these exchanges are actually holding the funds that they should be holding. And you can check that right here on CoinMarketCap. Something else as well, which is bad news, is that the FTX exploiter, which is potentially someone directly at Alameda or SBF himself, we can't really tell. But what they're doing is laundering all of the money that they stole from the FTX accounts. Nansen have a great portfolio here. I'll link it in the description. You can see it in real time. $260 million worth of laundered money that was stolen and hacked from the FTX accounts just after they went into insolvency or Chapter 11 proceedings. Now, what they're doing here is laundering this money out of the Ethereum network into the Bitcoin network. They're doing this through something called the REN bridge. REN BTC is a bridge from Bitcoin where you can take that BTC and then change it into other chains, for example, Ethereum. Now, funnily enough, REN BTC as a protocol, I believe, is owned or at least heavily invested in by no other than Alameda. Absolutely insane. So what's happening here is that someone with connections to Alameda or FTX, someone very high up probably, has stolen $300 million worth, more or less, of cryptocurrency, put it into the ETH chain. And as you can see, they're laundering it through ETH in 15,000 chunks and lots into Bitcoin as well. They're putting that into separate Bitcoin accounts and Bitcoin addresses, 288.8 Bitcoin per address. This is money laundering in real time from criminal proceeds of a hack. So absolutely insane what's going on right now. And, Bitcoin and crypto prices are not going to be going anywhere upwards when all of this nonsense is taking place. Some copium to end though, because this is actually normal, right? Bitcoin goes through cycles and everyone that got too big for their boots goes bust during the downturn. This happens over and over again. So let's see where we are in this cycle. This is the crypto collapse right here in Dallas. Now, I've heard a lot of Bitcoin miners are actually moving out of Texas to South America because it's actually cheaper to mine there. Bitcoin mining company defaulted, moved out. What happens when a Bitcoin mining company defaults? Well, all of their Bitcoin gets traded out onto the market, right? It's because they want that Bitcoin and they want cash to fund, other endeavors or just get out. And so a lot of smaller miners are just getting absolutely wrecked right now. How does that play in with the fact, though, that Bitcoin mining network difficulty is at an all-time high? It's really important if you're a long-term investor to understand that all of this nonsense with price is just all of these leverage players just getting what they deserve, right? The Bitcoin network itself has never been stronger in terms of network difficulty. This shows me that in every cycle, what happens is you get some smaller players who timed it well, got lucky and rode up the price, but they do not, they haven't managed their business properly and they're not big enough to actually weather the downturns. And so they just get seen off and they have to sell their Bitcoin cheap. What happens with the Bitcoin network right here is it tells me that there are potentially much larger institutions right here who have much stronger balance sheets, who can keep mining and actually start pushing the network difficulty upwards even more. These people are probably people that want to mine Bitcoin, that have no intentions of selling it anytime soon, and have very strong balance sheets. I'm talking about large energy companies and even nation states coming on. We know that El Salvador is mining Bitcoin. We know that Russia wants to bring on Bitcoin mining. And we know certain oil and gas companies are doing this as well. They have gigantic balance sheets and they're pushing the network difficulty up despite a lot of the smaller players having to sell down right now. This is also great research from Pantera, which I'll quickly go through. This is just a normal cycle for Bitcoin. Over the years, we have stressed that the halving is a big event, but it takes years to play out. The typical trough is 1.3 years before the halving, and on average, the market peaks 1.3 years after. The whole process takes around 2.6 years. Bitcoin has historically bottomed 477 days prior to the halving, climbed leading into it, and then exploded to the upside afterwards. That's the blow off top that everyone was expecting, which is why people were getting to this 100,000 price prediction. Price predictions, you'd never know. But the post-halving rallies have averaged 480 days from the halving to the peak of the next bull cycle. If history were to repeat itself, the price of Bitcoin would trough December 30, 2022. This is an incredibly specific prediction, which obviously is not going to happen, but they're just looking at previous cycles as areas where you can potentially predict, troughs and tops. We would then see a rally into early 2024 and then a strong rally after the actual halving. Now, the reason why they're saying this is because if you look at the Bitcoin price chart over time, it really does play out. Okay, you have a run up. Right, so right from 2012, you have a run up right here into the halving, and then a blow off top after the halving, and a complete, catastrophe afterwards. And then you have a bottoming out, a run up into the halving, a blow off top, and then a complete disaster. You have a consolidation, a run up into the halving, a blow off top, and then a complete disaster. Now, many people saying that this wasn't a blow off top, it was more of a double top. The size of Bitcoin now is so large, the amount of capital to keep this going is obviously extremely high. You're not going to get the percentage moves each time with the blow off top, as it were, because the amount of capital needed to sustain that is obviously much higher. But as you can see, we're right on track. We had the run up into the halving, a very strong move to the upside, and now we're in the catastrophe phase. And at some point in the next 6 months, 8 months maybe, you would predict from previous cycles that there would be a bottoming out and a potential run up into the next halving. Now, this also requires a lot of other things to be taking place. Potential regulation and, the acceptance of Bitcoin and crypto more broadly, stablecoins as well. But the fundamentals really are great, and we are in the exact same position as every other cycle with Bitcoin. So there's nothing untoward about what's happening here. Also, just to show you how important crypto is becoming, JP Morgan filed a patent and trademark for JP Morgan Wallet. All banks will have a wallet, that's obvious by now. This wallet is for financial services, namely providing electronic transfer of virtual currencies, financial exchange, cryptocurrency payment processing, credit and card payment processing, etc. So banks are coming on, they are coming on, everything is looking great fundamentally for BTC, and it's a terrible time for the price, but over-leveraged players are getting what they deserve, and that's what Bitcoin does to them every single cycle. If you are a trader, get your deposit bonus on Bybit by that link in the description. Free spot trading as well right now on Bybit, but take your investments off onto the blockchain because there's just so much uncertainty right now. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.